Okay, this is the market analysis for the week ending 9th October 2022. So, in order to make an analysis of Nifty, let's start off with S&P 500, which is the US index. So, we'll start from the monthly time frame. We'll figure out what the current trend is. So, if you look at the swing highs and swing lows, this was the previous swing high, the next swing low. Then we have a swing low over here, but we do not have any swing highs. Then we have a swing high which goes below the swing low, continues to fall below. So on a monthly time frame, based on Dow theory, it's safe to say that S&P 500 is in a downtrend. And if it has to become an uptrend, it has to break and go ahead above this level of 4278. So we check on the weekly time frame. We see the swing highs and swing lows quite clearly. So that was a swing high, swing low, swing high, swing low. You notice it makes another swing high, then a swing low. But this swing high, which broke above the previous swing high, it falls as fast as it goes up, which basically means it's a fake breakout. You notice over here, it did break out of the high, but it wasn't able to sustain the breakout. It made a evening star and then it started falling down. And currently price has broken the previous low, and it's trying to go up from here, but we are unsure about it, so we can go into the daily time frame. In the daily time frame, we notice price has made a high, a low, a high, a low, a lower high, a lower high, lower low, lower high, lower low, a higher high. Again, the same thing as in the weekly trend. It has fallen as soon as it went up. So if we assume that we are going to trade the daily time frame, then the weekly time frame will become our support and resistances. Correct? So if we notice over here, price has fallen in a very sharp fall, and now it's trying to go down, but we see a slowdown in the fall. Correct. So there are two things that can happen. Either price falls, goes to the next support, which is 32.33 or 35.52, or price moves within this range. These are the only two possibilities that might happen. Let me show this in the daily time frame. So currently we know what range we expect the price to be, which is this area. In the daily time frame, we notice that price did break out of the previous high, but it went below it within 3 days. So there are two scenarios that can happen at this place. Either price keeps on falling, or price goes up a little bit and then starts falling, or price goes up from this area. These are the only three things that can happen. So to conclude, S&P is in a downtrend, and on a daily time frame, the most likely scenario is we fall further, but we are not sure if it's going to go one way downwards or there'll be a slight rise and price will test 3800 again and then fall down, which is this scenario, which I think is most likely going to happen, because now let us check SGX 50. I prefer making my view on SGX 50 because there are no gaps. Like if you compare SGX 50 to Nifty 50, you'll notice there are a lot of gaps in the daily time frame. Right? This you won't notice in SGX. Okay, so we'll make our analysis of Nifty 50 over here. See, in the monthly time frame, if this was a swing high, then we have a swing low, and then we have a swing high over here, and then we have a lot of swing high, swing low, swing high, swing lows, which basically means price is in a sideways trend over here. So to better understand the trend, we'll go into the weekly time frame. So in the weekly time frame, we see price has been making lows, highs, lows, highs, lows, highs, which basically means price is in a sideways trend. The range of this trend would be 18,598 and 15,510. So we will be bullish if price breaks this level, sustains it, and goes further up. And we'll be bearish if price breaks this level and goes further down. While price is within this range, we expect price to be within this range until there's a break. So if we assume we are going to trade on the daily time frame, then this becomes our range in which we'll trade. So in the weekly time frame, we notice this swing high, swing low, this higher high, and we have a higher low, then we have a higher high, and then we have a lower low, which means we are again in a sideways trend. So we'll have to go into the daily time frame. In the daily time frame, if this is the high and if this is the low, what we notice is price is making a downtrend. Is it made a high, made a higher low, made a lower high, and then broke that low and made a lower low, and now is making a lower high. So the most likely scenario is price goes down. But still, let's look at this from the perspective of buyers as well as sellers. So what we notice over here is price broke and went straight down, and then there was a slowness in the fall, and then there was a spike and a huge rise. So what this means is sellers sold in a panic. They basically got squeezed, and maybe now buyers think this might be a good time to buy. So what the next leg might be is buyers would start buying at this level, and sellers will start exiting their positions, and price will start to rise. So if price has to rise, there can be two ways in which price rises. Either it rises in a very strong fashion and goes up, or it rises in a slower way and then it falls down. Why I think this might be the ideal scenario is because as soon as buyers realize that it's not a bull trend and that we are in a bear trend in the daily time frame, there'll be a lot of selling pressure at this area by new sellers as well as current buyers who want to book profit or think price is not going to go up. So if that happens, then price is definitely going to fall down. So the next week would be very interesting because there'll be two scenarios, which is either price goes up and probably the next resistance would be over here. Either price goes from 1700 to 17889, or price goes from 1700 to 17470 and then starts falling, or the third possible scenario is price just keeps on falling down. So these are the three directions that might happen, and what I think most likely would happen is this scenario, which is basically price will go up and then we'll see selling pressure over here and price will start falling down. So now this would be the same scenario in Nifty 50. Basically price going down, coming back up and then falling again. So if Nifty is over, let's make a view of Bank Nifty. Okay, Bank Nifty is in a really nice position because we are currently making a double top scenario in a monthly time frame. As price has come here and tested this resistance again, this month's candle will confirm the fall, or it might not. So let's go into the weekly time frame to see what's happening. In the weekly time frame, the first thing that I notice is that we have a bearish engulf and kind of an evening star over here at the previous resistance, plus if this was the weapon of bulls because it's a bullish engulf, its low has been taken out by a bearish or a neutral candle, but the low has gone on a closing basis, which means the bears are able to pull prices down and the bulls are unable to pull prices up. But what we also notice is price is taking support at this level because of the VIX, which basically means there is a lot of buying action over here, either by sellers booking profit or new buyers coming into the market. So if we have to make a better analysis, we'll have to go into the daily time frame. On a weekly time frame, however, if it is truly a bearish trend, then what's most likely going to happen is this swing low is going to go and we are going to see prices fall way back to 32 155 because there is no support till that level. This might act as a support because it's a resistance that has been broken, but if there's no support over here, it's straight going to go down all the way over here. So let's go into the daily time frame. In the daily time frame, we notice there was a swing low, there was a swing high, there was another swing low over here partially, and then there was a swing high, there was a swing low, lower high, price fell below the low of this low. Basically, this is a candle that confirmed bears were in power. So what this means is, on a daily time frame, this would have been a support if it was truly bullish, which means there are a lot of bulls that are trapped over there, and it's a good place for people to short because the bulls trapped over here would start selling and new shorts will add. So what might happen is price might go over here and then fall further down, or price would just fall further down. However, it's not quite clear what Bank Nifty would do as compared to, let's say, Nifty. So the two ideal scenarios are either price falls down or price rises up but slowly and then falls down. Or if the bullish scenario which might play out, maybe price falling down but not as fast as the previous low, and then price goes up. This is highly unlikely, but it should be in our focus. What I think would most likely happen is this scenario, not this one. Yeah, this one in the center, which basically means price falls, but bulls come back thinking it's a bull market, or sellers book their profit or loss, and then price goes up only for them to realize that this area is a good price to short or for bulls to book profit, and price further goes down. So I'm not sure if we'll see this action next week, but most likely we will see a bullish action next week, and we will confirm that in the next weekly market analysis.